What's up, traders? So let's do a complete multi-time frame analysis of gold. Let's see what kind of trading opportunity we have in this precious metal. Now, what you see on the screen, this is the daily time frame on gold, and what you see that gold is in a very narrow range for quite a few days. And when you see this kind of range, you can expect gold to break this side or that side. Before we analyze further which side gold is breaking down and how we can trade, make sure you smash the like button, and let me give you a multi time frame analysis. Then we'll come back to this time frame to see how we can trade gold. Now, first of all, let's see monthly time frame. Now, monthly, we see that gold basically first of all tested this historically high price along this zone and then rejected primarily with this long week monthly candle. Now, as soon as this candle closes, the buyers and sellers are not moving anywhere. They are just going in a sideway, as you have seen on the lower time frame. Now, which way the market is going currently from this time frame, we may not be able to see. Let's see weekly time frame how the price action is forming. Now, on the weekly, one thing we have seen that gold has broken this very long trend line. So we have seen that gold was moving along this, respecting this resistance quite a few months. In fact, resistance here, resistance here, resistance here. So it was respecting this resistance, and at the same time it was respecting this support for a very long period of time. Okay, so support here, support here, support here. So it was a very long period of time the gold was acting as a support in this zone. So at this point, this is the weekly chart. As you see that this is a long term bullish market, and long term bullish market, bullish momentum is expected. But what we see, there is an one important clue here that we need to keep in mind is that gold has created an imbalance in this zone. So as you can see that there is nothing here. You see there is this zone has not been tested, so market doesn't like imbalance. So we might see that gold is coming down to test this resistance as a support, and also balance this imbalance, and then may start to rise up. So we see that this resistance so far has not been tested properly as a support, and also this support also has not been again as a support. So with that being said, gold may immediately at some point this month may break to this side and then started to move up. So with that being said, now weekly, see that weekly time frame we might see bearish move. Now let's see on the daily time frame how the price action is forming. Now, as you see, as I mentioned already, that on the daily time frame, gold was creating a very narrow range. Now, let's analyze this range and try to find out which way gold might be heading. Now, one thing always we need to keep in mind: this is established, uptrending market, and in an uptrending market, normally a consolidation breaks to the upside. But the way the consolidation has happened on the daily time frame, let me draw this level of support here. So this is the daily support has been created in this consolidation. So what you see on the daily time frame, that the price has created a support here. Quite a few daily candle created a support. The sellers tried to push the price down. Immediately the buyers bought and the price went back to the range. And in this daily support as well, we see that there is another structure. Now you see that there has been a triangular structure is formed in this zone. So which way gold is likely to break? Now this daily pattern, there is one important thing we need to keep in mind, that you see there has been a series of lower high has been created on this level of support. So when you see this kind of pattern after a move to the downside creating a series of lower high on this level of support, we can expect it to break to the downside. This is the normally That's how happen when you see a support and creating a series of lower high, basically putting a pressure on this level of support, and at some point the support is likely to be broken. So from this structure we have seen that, but over the long term gold is bullish. So at any point even gold could create a bullish structure and then break to the upside and may move up. So in this narrow range, trading gold is not a good idea at all. This is a one candle range, the worst market. If someone trade in this narrow range, there is a high chance of losing money. So how we will be approaching gold? We will be approaching in two ways. If gold manage to break to this level, to this downside, and we will be wait for a retest on this support as a resistance on the lower time frame on the 4 hour. Let's go to the 4 hour. So we'll be waiting for a breakout to the downside. If it breaks to the downside, then we'll be wait for a clear retest of this support as resistance. If this has happened, then we will consider selling gold from here. On the other hand, if gold create a bullish price action like that and break to the upside, you see there is a false breakout here, there is a false breakout here, so it is not impossible that again will break and create a immediately come back. That's why we need to wait for a candle close above and then retest. So retest means if the next one immediately come back, that is a false breakout. If we see the price came here and then rejecting to the upside, that means that gold may start to trend to the upside. In that case we will be considering buying gold from here with a high risk to reward ratio. So these are the two plan that you will be using for gold trading. And if you find value in this analysis, then smash the like button. As soon as gold breakout, I will definitely update on YouTube and wherever you are following me, and also to my VIP members. Thank you for watching. See you soon in my next analysis.